Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and U.S. economy space. And as you can tell from today's title, we are going over those bearish sentiments and the bearish indicators today. Could we possibly go to that 13K mark that everyone's talking about? Well, we're going to go ahead and show you how that might happen. So if you enjoyed today's content, go ahead and drop a like below and comment which indicator and which video you like the best, because as y'all might have noticed, we did make a video on all of the bottom and bullish sentiment yesterday, so we'll go ahead and drop that in the description if you didn't check it out. But if you guys could go ahead and subscribe, that would be great. Let's go ahead and pull up TradingView. I first want to go ahead and start just with Bitcoin on the weekly chart. So as you can see here, we've rallied quite well in a short time. In about 49 days, we've gone up 50%. But I want to show you, just because that has happened doesn't mean we are out of the woods just yet. If you go ahead and look at Bitcoin's past, we've had moments where we've had a nice 80% in 3 to 4 weeks, while also currently where we're at right now, we've had a rally to 60%. So just because we're having these short pumps doesn't mean anything. Bitcoin did have a 2 or 3 of them in its last cycle, to where you see we had one right here of 37. Now we actually are currently in what you could call our third one right now, with this one being the first one of 127%. Or maybe that could be the top, people call it, so we'll take the first one being right here at 42%. You could possibly count this one at 45% as well, and then go ahead and count this 50 to 60% one. So that would be those 3 that we did see here before we ultimately see that one last correction. And also what I want to go ahead and do for y'all is pull up the volume profile. And as you see here, we do have some space below us going back to that pre-2017 run-up. And as you can see here, we never really did go knocking on that door of 12,000. So typically you will fall down there. Now right now we are just in a gap, so we could get sucked up to this bottom at resistance right here. But also if we do get steam, we could ultimately now fall all the way back down here, catching and consolidating for some time, and ultimately hitting our head down at this low and double bottoming, and then possibly worst case scenario hitting that 13,000 range, which as you can see here was a local high for some time before that bull run. So I wanted to point that out on TradingView for y'all. And also if you go ahead and turn that off and look down here at RSI, and we go to the actual daily chart, you'll notice we are at that top area 70, also coming down from 90. And if you go back in the previous times and see that, what followed was ultimately corrections. So right here we did have a nice 28% correction, and we did have a nice 24% correction. Now also if you just see here coming up around in these areas, we did have corrections in this time frame as well of 22%. So it does look like there is a majority of those 20% corrections, or just a consolidation period. And then you see a run up and spike once it hits around 50, consolidation. So it is kind of unexpected, but just because we are hovering around that top bar is never really a good sign, because it could lead to those 20% corrections that we have seen, and that would ultimately bring us down to roughly 19.8, which is filling in that CME gap that we did talk about in that bullish video, but we talked about it hitting those top cases first. Well, ultimately if it did have that 20% correction, it would fill this bottom CME gap, which could be that bearish indicator. So I wanted to point that RSI and volume profile on Bitcoin's chart, but I think it's also kind of important to go ahead and look at that dollar currency index, because if the dollar's strengthening, people are going to tend to keep it there, because if the dollar is increasing in value, why are you going to put it into a risk asset? Because ultimately, if you kind of look at the S&P, typically once you see the Dixie start turning, you've noticed the S&P starts going downwards. So this could be an interesting thing to pay attention to, because Bitcoin has pumped with the Dixie, which is not typically what you see. So I think this could be a hint that there could be bearish times to come for Bitcoin. It could be kind of a leading indicator, or it could be that we are finally getting a beta score of 0.2 to 0.3 from these traditional markets, and we are decoupling further. So I thought this was also important to highlight for y'all. Now, I do want to go ahead and pull up one of the 9 from that CBBI. And as you guys can see here, in the past, we have spent some time, and it is about a year below this green line. And I think that is important to note, because currently we aren't near a year, we are at that 13 or the 9-month mark. So that could mean that there is 2 to 3 more months upcoming of those bearish times. But it does look like there is one more correction, because there looks like there was a couple of run-ups, and as you can see here, 1 and 2 distinct run-ups here. So that could actually mean that we will have one more correction before actually breaking out of that green line. So that's why it is important to look into all of those CBBI indicators. Just because 2, 3, or 4 of them are flashing, it is important to look at all of them, as well as the social sentiment, because if you do look at Google Trends and you pull up Bitcoin, it is still trending downwards since that FTX collapse. So once FTX collapsed, you notice Bitcoin did have a spike up, but we have been ultimately still decreasing since then. We haven't made that new high yet. We have made a kind of trend upwards for a short period of time during the first 2 weeks of the year, but that was back when Bitcoin ultimately did, as you can see here, have that huge week of, let me get the exact percent for you, of 13%, I believe. So that is important to pay attention to. Yes, 8%, yeah, so 12%, 12, 13%. And then if you do pull up crypto, you can see that as well is just on a decline. It's not as sharp as Bitcoin, it is kind of flatter, but it ultimately is still going on the down after trending for some short time. So it is important to look at those Google trends, as well as we are going to go ahead and pull up the CME group, because like I did say, if it is expensive to borrow money and it's kind of more valuable just to keep your money where it is, then why would you kind of go buy assets? So as you can see here, it does look like we are going to go to 50 basis point, or sorry, not 50, 5% for the interest. So if that is the case, then ultimately it will just take away from people's money, and if they don't have extra money on hand, how is there going to be new money entering the space? With that being said, you can kind of see that Bitcoin's last pump is due to these altcoins actually losing a lot of their dominance in the market. And let me go ahead and get rid of the S&P. So as you can see here, USDC after peaking this last year, looking like Bitcoin's graph, we actually have broken kind of what we call support. So we're breaking support, and who knows kind of where we will fall. Tether is still at that support, it hasn't broken it, but that could be what is that next push of Bitcoin before we ultimately see it start bleeding again. Is it getting down here? But I don't know if we can actually call that much new money entering the space, because if you do see here, we are just peaking above it. We haven't really confirmed it because it could be another fake out like we did see back here. So I do want to see us break truly above this 1.2 trillion, 1.175 trillion before I actually officially call it that, because I think that would be the last layer that officially announced makes me think that we are going bullish. And then there is the final two kind of stories I want to show y'all. Now, yes, this does look bullish because they are going after a bad actor in the space with his schemes. But it is just showing that the SEC is focusing more on the crypto space, which means tighter regulations could come. Tighter regulations could mean a better answer for the space, but there are also people out there that are completely against it, and it could also prevent businesses from coming to it, which would ease the on-ramp for people. AKA what is happening right here with Binance. Binance is actually considering leaving US completely after what has all been going down with the SEC. I do have a video on it about all of the stuff that the SEC has been going after with Library, Ripple, Kraken, these coins. So as you can see here, they are considering cutting several ties with just business partners, government agencies, regulators, venture capitalists as well. They even considered delisting some of their tokens. They did shortly say that this wasn't true and that they do believe crypto should have no borders. But ultimately, CZ is the only person who knows exactly what Binance is going to do. And like I said, this is because of what the SEC did to Kraken. They ultimately don't want to pay these $30 million fines to the SEC. So these are kind of some of these bearish sentiments for y'all. I wanted to give y'all both sides so y'all can get all of the education and kind of do your own research off of these short story highlights that I gave y'all. If you want me to dive into any of them for y'all, go ahead and comment on which ones, but that is all I have for y'all today. Go ahead and subscribe and drop a like if you did enjoy today's content, but stay safe out there and bye-bye!